Hey everyone, welcome. Haha, it's live with Rob on Tuesday again. Coffee. Good to have you back again. Don't forget the risk. Most traders lose money, and if you're unsure, you probably shouldn't be trading. Let me take the risk disclaimer out of the way. And let's go and have a wee look, shall we? I'm just putting my ugly mug in the way today. And we'll have a look at what kind of trades we had this week, what kind of trades we're going to get next week, and see where we go. Starting at a few minutes earlier so everyone can get on board. And we've started later. We've started later so that more people can get on board if they need to. There's a few questions that we have to answer today with regards to Eugene had a problem with the with a take profit on one of his trades. We'll have a look at that. How to work out your trade size, one or two things like that. We'll get to that. Let's have a look at the history of the trades. You see, we've got no trades on at the moment. It's completely empty. So if you guys have got any ideas, any trades, you're welcome to choose a trade. We do have trade of the day, which is CHF-JPY, which we haven't taken yet because that's still in the red, and we were looking at a long trade out of the support. Hey, Chris. Good to have you. How's Shane? Welcome. Good to see you again. Yeah, so we haven't taken that trade yet. And history, we got stopped out of New Zealand dollar, US dollar on a trailing stop at $83.84 profit. Look, like I said earlier, these 260, 140s, these trades, if you get taken out, you would have taken them, if you were scalping, you would have got those profits anyway. So they build up as you go. It's a mishmash of small profits. What you're looking for is the bigger ones, obviously. As you know, the US 500 was stopped out before the weekend. Well, I stopped it out before the weekend. Early loss because I don't like to keep indexes long over the weekend, which was probably a good thing. We'll go and have a look at the index now and you'll see why it's a good thing. And then Euro Great British Pound, I took that trade yesterday. I just didn't like the trade anymore this morning. Wasn't happy with it, so I took a loss of 25 on that for us and just decided we're not going to sit in that trade any longer. It's just milling around and it's just not going the right way. So I wasn't not happy with that trade at all. US 500 tanking down to the downside, heading down to the downside. This has got a lot to do with the feeling around the markets and people talking about the end of the world and the crash and all the rest of it. And it would appear to me that this is just noise in the market that's causing a bit of a correction. And we need a bit of a correction. I would love to see it come down here into the 57, give us a nice long trade out of there, give us a nice buy. We get something on the go there. That said, yeah, some people might not agree with that. Some people might be sitting long in this and waiting for it just to go up in a straight line. Markets don't go up in straight lines, guys. They tend to go up and down. So that you have to accept. But the US 500, the S&P 500 has broken through its trend support, which is, if anyone's long, that's nerve-wracking, guys, because this could give you quite a big correction. That will mean the US 30 is in the same position. The DAX will probably hit the same position. So keep your eyes open. Watch out for this. This could be tricky for your trading. Don't get caught up in it. Don't get caught up in all the noise. Just wait for the trades. Take them when they come. So I've also created the Ask Rob sort of situation. You can ask me questions in the comments and I'll try and answer them in the live videos. I'll also try and answer them in the morning members videos. And on the weekend, I don't know how you guys found Trade of the Week last week, if it was any good for you. If you liked the video, give me a thumbs up. That'll be interesting to know because I'm putting the Trade of the Week out now so that you guys can also get the picture that it's not just Trade of the Day or Trade of the 5 minutes. If you look at the overall picture of the market, you get an idea of which way certain instruments are going, and you can actually trade those instruments based on the direction that it's going in. Okay, so I got a question here, and the question is, morning, Hope, how often do you adjust, close, break even your setups once you've set your take profit and stop loss? Isn't this trade you've agreed on regardless because we don't know what price will do or why adjust setup? Hi, everyone. Hi, Coral. How's it, Coral? You have to understand one thing about the market. and that is that the market is subjective, not objective. And if you make a hard and fast rule, it can be broken. Thing is, when you've been trading as long as I have, which is around 30 years, you get gut feel for things. Gut feel can sometimes be wrong, and it is the wrong way to trade, and I don't want to teach you gut feel. But sometimes you look at something and you just say, this is not working out the way I expected it to, and you adjust. You have to adjust when things go against you or when things are not working out quite the way you expected them to. Or even if something has gone way into profit and you're just feeling like, hey, it's time. You know, this thing's run out of steam. It's not going to hit my targets. I'm just going to get out of the price here. Or in a situation like the New Zealand US dollar, let's see if I can find it here. We were in this trade for a really long time, longer than one would expect to be. I even held it over the weekend, which is something I don't like to do, which is another reason which I adjust. Now, I adjusted this trade last week already before the weekend. Now, I adjusted all the trades before the weekend. Before the weekend, I said I moved these stop losses into really close behind the profit because I don't like holding trades over the weekend. So they were all adjusted for that purpose. The New Zealand dollar, US dollar didn't take its stop loss out, continued on up, and I took the risk of holding the New Zealand dollar, US dollar over the weekend. The US 500 was an index which was long, so I took that out. I decided that one's getting closed, regardless of what's happening. That one's getting closed. Now, the New Zealand dollar, US dollar, I'd moved the stop loss up, not only into break even, but into a profit as it was moving along those lines, and it was moving very generously upwards. Now, today, I actually, to be honest with you, totally forgot that I even had that stop loss there, but it was in a good place. It came down, took it out, and with the trade having been in so long, I let it go. How often do I adjust it? In my opinion, if I've got a $400, $500 target, I've got a $250 stop loss set, and it goes $150, $200 into profit, I'm moving that stop loss up to break even. It's halfway to my profit. It's, well, not halfway, let's say 30, 40% towards my profit. I'm going to put my stop loss up at break even, if not in profit. And when it goes halfway, $250, $300 into profit, I'm most certainly going to move the stop loss up to a reasonable level. So, for example, where this particular one, this one, the Euro US dollar, $260 profit, that one was like $300 and something dollars in profit when I moved this up to a $260 stop loss. And then it came back and took it out while we were not looking, and looking the other way, and so be it. That's it, gone. That's why it's at that level. That's why it's at a 1-to-1 profit. Otherwise, it would have taken target, and target was much, much higher on that particular product, but it didn't make it. It didn't get there. So be it. That's, yeah, I move with the times. I move with the markets. Don't understand me. I'm not rigid. Okay, you can't be rigid in a subjective market. Why is a market subjective? Because it's made up of human beings. It's not made up of maths and squiggly lines and algorithms and fractal things. That's rubbish. That's just what you are playing with to take a high probability trade, and that's just a system that's been put in place so that you can buy and sell trades on the market. The reality behind the market is you're dealing with other traders. There's buyers and there's sellers, and there's got to be a willing buyer and a willing seller for a trade to take place. No matter what algorithms are in there, no matter what bots are trading, no matter what's going on your computer screen, or no matter what time frame you're on, moving up and down, who cares? At the end of the day, you need a willing buyer and a willing seller for a trade to take place. That makes the market a subjective place. That's because people buy and sell. There's no hard and fast things happening. For example, if you see lines and lines are supposed to move in a certain way, do you think that line is now some kind of a brick wall? Now, what happens if the Fed in America stands up and says something completely ridiculous? Why do you think the markets start crashing when that happens? It's because there's a whole bunch of traders out there that have taken a trade hoping that they'll make a profit in the future, and when they hear that guy talking, they say, wait a minute, it looks like we might take a loss, and they sell all their shares, and yours are in there, and your value goes down. It's as simple as that, guys. Liquidity, people, shares, human beings. Got nothing to do with maths. So yes, I adjust, and gut feel gets me to adjust quite a lot when I see things are not just going in my... Sorry, for example, I take the Euro Great British Pound trade. I look at it and I say, oh, I'm going long on that, and I take the trade, and it potters around here, and it really comes back and goes up, comes back. It's really undecided. It's not doing much. It's not really... It doesn't look like a great trade anymore. It looked like a great trade when I took it. When I took the trade, I thought, wow, this is a great trade. I got to take this. This is the trade for me. It's a trade for all of you. We're in. We take the trade. And a day later, I'm looking at it and thinking, it doesn't look that great anymore. It's just potting around here, and it could go either way, and it's looking kind of iffy. Dump it. Walk away. If you're not feeling good about it, walk away. It's a subjective thing. Just walk away, take the next trade, look for a better trade. That's it. Simple, really. It's not rocket science, not complicated. So yeah, why do I adjust the setup? How often do I adjust the setup? And that's another thing, guys. A lot of guys ask me, how often, how many, how much, how many times you trade, how many trades you got, how often. These are not things that you should be worrying about when you're trading. Because if you're worried about how often you trade, if you're worrying about how many trades you've got, if you're worrying about numbers, you're not going to trade well, because you're just trying to make up the numbers. How often do I trade? I trade when I see a good trade. That's it. If there's 1 for the week, great. If there's 20 for the week, great. That's how often we trade. That's how we trade. How often do I adjust my setup? I adjust my setup when I feel that I need to adjust my setup. When I feel the gut feel says to me, you know what, you need to adjust this. This is not going the way you want it to. So while I'm staunch on the strategy of keep your stop loss the same on every single trade and win more than you lose, where you can, obviously, and that's how you set your strategy. Your strategy doesn't always play out, but I'm hard and fast on the rule of the size of the stop loss, the size of the win. Keep that the same on every trade. But if you can get out earlier on a stop loss because you just don't feel good about the trade, there is nothing wrong with that, because you lost less. The point is to try and hold your trades for the win. But now when you move your stop loss up, you're trying to hold your trade for the win, but sometimes it just comes back, takes it out, and you end up with a mishmash of smaller wins. That's just how trading works. There's nothing you can do about that. At the end of the day, it's always going to happen, no matter what you do. But your plan is to try and make more on that trade. And if it does play out, then you make one big trade, and it's great. And that sort of moves your account the way you want it to at the end of the day. But those little mishmash ones that are going to take you out, you have to accept them. You have to accept those as either break-evens, losses, or small profits, and just move on. Move on to the next trade. And if you've got a whole run of small profits and everybody says, oh, your system's not working. Well, if I was scalping, that's the only money I would have made anyway, so I'm still making a profit, aren't I? So end of the day, that doesn't really matter. Okay, so Shane, I'll go over Euro, Japanese yen using fib extension. Okay. You're short Euro, Great British Pound, which is why I dumped it earlier. I was long. I think you'll notice that our call was long. I do believe our call. Let me just check my trade of the day. And the Euro, Great British Pound yesterday, we called it as a buy. We called it long. I took it long, which is totally opposite to you. And it wasn't working out. And I dumped it for a loss of 25 bucks. I mean, it's nothing at the greater scheme of things. It was just let's get out of that. That's not looking great. And as you can see, it could go either way, because Shane's now short and I was long. So it could go either way. It's 50-50, and it's not a comfortable trade. And then Daniel says, only trade what you see. How's it, Daniel? Morning. Good to see you. Haha. Daniel makes it early today because I started late. So we'll be starting this show late every single week, most likely. We'll be starting at 11, which is probably better. Eugene, when you're here, let me know. I just want to see if Eugene has arrived, because I do need to go over something for Eugene. Eugene had a problem where his take profit wasn't taken, and I want to have a discussion around that so that we all understand how that works. Guys, if you've got any other trades that you want to look at, let's look at them. Shane, I'm not going short on the Euro Great British Pound. I was looking at a long on the Euro Great British Pound. Let's have a look at the Euro JPY for you quickly while we wait and see. Euro JPY. Okay. Euro US dollar. If Euro US dollar past 83, I want to go long. I'll have a look at Euro US dollar as well. Euro JPY. This is Euro JPY, right? Euro JPY. You see there's a nice sort of double bottom here. There's a lot of bottoms here. So there's a strong support at the bottom here. Very strong support. Let's just look back. This is a massive support. Look at this. It's bounced, 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 bounced. So in all likelihood, in all probability, this is probably going to come out of the support and head on to the long side. So what you can do is just, that's a trend line. Let's draw a trend line through here. Now, I don't like drawing it on candles, but I do it quickly just to give me a quick little picture of what might be happening. And then we can just look. If we get a green candle breaking through this, then there's a good sign that we're probably going to break the structure and head on to the long side, which is, it's not a bad thing. So yeah, as far as Euro JPY goes, let's see if we get the long trade to the upside. You can't trade it yet. It's sitting in this area. And if it breaks to the downside and breaks past these lows, then you've got a serious short. But if it breaks to the upside again, breaks through here, starts heading up, we're looking at quite a nice little long trade again, probably back up into these areas. So let's keep an eye on that. That looks decent. And then her is bullish on Euro US dollar. Yes, Euro US dollar I've got down as a buy. Definitely got it down as a buy. And then if you look at it, I mean, it's pretty straightforward. You can look at it and definitely looking at it as a buy. Look at that. It's in structure. It's in a trend. Looks good, man. Looks good. And yeah, there we go. That looks decent. It looks like it wants to continue on to the upside. Probably go up into this main resistance area. If it can hold this resistance area, it'll come back. Otherwise, breakthrough will send it all the way up. But yes, bullish at the moment. It is bullish at the moment. It's looking strong. The same as the Great British Pound US dollar should be the same. Heading in the same direction. Also looking strong. So yeah, Euro US dollar, most certainly a nice bullish trade. It's staying above that trend. As Daniel pointed out there, trade what you see. What do you see? It's in the trend, it's in structure, and it's above, and it's going up. So we can stay with that. Euro US dollar, you can literally go long. Okay, which way around have you got it? US, yeah. Well, as we stand at the moment, if you go to the weekly chart, it's long. You go to the daily charts long, you go to the H4, it's long. I think you were looking on 0.83. I think you're looking at the Euro Great British Pound, Euro Great British Pound. And like I say, I was long on the Euro Great British Pound. And it's, it's fine. It was a long trade. I took it. It was out of here. Looked great. I got out with a slight $25 loss, just thinking it's just going nowhere. It's just going sideways. It looked like it wanted to go up, but then I've just lost confidence in the trade here because I look at this bearish move, this pennant pattern, this move down, and then it's going sideways again. Just sort of says to me the next move could just fall down as well. So I'm not confident in it. Gut feel says to me dump the trade. So I don't need to sit in the trade. It's a break even, walk away, look for another trade. I'm just not happy with the trade. I don't like this pattern where it's, it's down, along, down, along, down. Okay, just follow the patterns, guys. Follow the patterns because human beings are creatures of habit and they'll probably do the same thing over and over again. So yes, Carl, I was in the same mindset as you. I thought, no, it looked great for a long, all the rest of it. And, the whole idea was it broke in there. It was going long. You'll see I drew another little line in there because I was looking at this thinking it's going to break through that. I didn't even wait for it to break through that. I thought, no, I'm just not happy with the trade. Not comfortable with the trade. So I let it go. And there is a space down to this major support area here. And it's just running along here. It looks like it wants to go down. Gold, let's have a look at gold, guys. How's gold doing? Gold is still going long. I'm still expecting it'll get to this 3,000 actually. You'll notice Bitcoin, a lot of you guys trade Bitcoin. You'll notice Bitcoin did exactly what I said it would do. Not scratching my head here, but I'm just pointing something out here. You know, you guys, I said it was coming down, going along, follow down. And I called it a sell now for the last a week perhaps. And there it goes, broke through this. And I said when it breaks through the support, we've got a nice run to the downside. Why am I not short on Bitcoin? I don't like to trade Bitcoin, but what I am waiting for is for it to get down to these lower levels, give me a nice sign or signal where we can buy, and we'll get it all the way back up to 100,000. Then we'll make some serious dosh out of Bitcoin. When it comes to systems and strategy, there's two different things here. The system is the squiggly lines, which will give you a high probability trade. The strategy will always remain the same. The strategy will always be the win more, lose less strategy. Keep the risk the same. You know, the strategy that I point out to you guys in every single video. Stick to the strategy to make money. Don't change the strategy. Keep the strategy the same if you're going to use my strategy. Then the systems, you can use any system that you want on any account, on any product. It doesn't matter, any system. All of the systems in the markets work. Every single system that's known to mankind actually works. There isn't a system that doesn't work. They're all backtested by some expert. It's just a question of how well you know the system, how well you run the system, and how well you approach the system, which is, as you know, the strategy, the psychology, the fear, the FOMO, sitting on your hands, the patience, and the ability to make more on your wins and lose less on your losses. That's where the profit lies. But my system is very basic and very simple. My system on the high probability trades, I simply look at price action. I look at support and resistance, and I look at trend support, trend resistance. I will sometimes add in a supply and demand just to see what's happening there and see if there's any money to be taken on that side. But mostly just support and resistance and trend lines. And that's good enough for me because I can clearly see what the trend is. I can clearly see if it's broken the trend. I can see where the support is. I can see where the resistance is, where it's hitting, where there's liquidity, where there's money in the market. And that's all I need. I don't need anything else. Once in the blue moon, I'll have a look at a stochastic. I'll have a look at a RSI or something like that. If I'm really not sure of the trade, I'll just have a quick glance in there and just see if there's anything there worth looking at and see if we can get a bit more information out of it. But just bear in mind that many of the systems that are available to you on the markets, many of these moving average crossovers, MACDs, whatever the case, many of them are lagging indicators. They're slow, they fall behind. And when you've got a lagging indicator, then there's a good possibility you're going to be late into the trade. You're only going to take the small bit out of the middle. You're not going to get the major portion of your trade at the end of the day. I'm loving this US 500 today, the way it's crashing over. Okay, so I don't really use different systems across the different accounts. What I will do run across the different accounts is, for example, a cash account I'll treat differently to a funded account based on the amount of trades you can take and that sort of thing, because you've got certain drawdowns to worry about and that sort of stuff. The different systems that I'm showing you guys on the videos, if I show you guys the Fibonacci, if I show you guys the moving average crossover, if I show you guys the MACD system, I'm showing it to you so that you can understand it, because like myself, I don't use them, but I know about them across the market and I've used them in the past just to try them out. I've tested them, and it's always good to know what the competitors are doing. It's good to know what other people are working with and how the other systems work. So most of the systems, I do know how to work with them. Even the Ichimoku system, I know how to work with it. Interesting system, really. So working with them, no, I don't need to work with them. But understanding them, that's great. And I do try to make videos about them for you guys once in the blue moon so that you guys can know how to work with those systems as well. I did have one person ask me to do Bollinger Bands, and I must apologize. I have not done that video because I just don't like Bollinger Bands. I think they're a load of rubbish, but I will show it one day, and you guys can decide for yourselves. I just, when I don't like something, it's very difficult for me to get around putting it out there and showing it to you and all the rest of it. Somebody did ask me about it, and I'll put it out there, and I'll show you what it's about and all the rest of it. I'll get to it. I must apologize to that viewer that did ask me about Bollinger Bands, and I just never got around to putting it out there for you guys, and I really should one day. Okay. Eurocad, where's Eurocad? That's Euro Aussie, Eurocad. There we go. And you're waiting for, Carl, you're waiting to go long at 140, 149. Nice W bottom. Okay. Okay, I haven't heard anyone say that for a long time. The W bottom. Yeah, okay, that sounds good. Yeah, volume. Volume is a good thing to trade with. Volume will help you, and if you can trade with volume, I don't want to confuse everyone with volume, but yeah, volume tells you when a move is good and when a move is bad. The reason I don't put volume on my charts mostly is because I don't want too many things and too much stuff on the charts, and volume has never really made a big difference to me because most of the times when the moves are there, the trades are good. So okay, so yeah, volume-based indicators, and volume is difficult on Forex. It's good on index and it's good on shares and whatnot. Forex is a difficult one to call on volume, but yeah, if you want to use volume, there's nothing wrong with it. I really don't mind using volume-based. You can use volume-based indicators. You can base a lot of your trading on volume. Volume gives you a lot of information, but on Forex it's iffy. On Forex it's a bit iffy. But yeah, on the indexes and things like that, not too bad. But yeah, if you want to use it, it gives you the right information. I mean, as long as you're using it right, as long as you understand that it's really just telling you when it's a good or a bad move at the end of the day. Nothing much else. Ranging, Shane. Which one was that again? We were looking at Eurocad. Ranging. Boom, 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 boom. Yeah, you know what? Okay, let's just have a look at this quickly because we've got Eugene. You're here. I'm going to talk to you in a moment about your problem that you had, so that we can go over it. I've been waiting for you. Morning, Eugene. Right, great. Okay, so Carl was looking at the W bottom. Shane is looking at it ranging. You see how different traders look at the different picture here. Guess what I see? I see what would have been a head and shoulders, which is not. It's broken now, okay? So now we're looking at a W bottom. Now, the one thing to keep it simple is look at this, and yes, you're right, it's ranging. It's ranging in a really big way, but it could give you the move back to the top side, which means you're both right. So it's ranging, but you're getting the W bottom, so you're getting the move to the upside anyway, which is up to the top of the range. So yeah, it is ranging, and you could still get the W bottom as well. So, and it's quite a big one, but you're gonna get the move up to the top, which is great. But you're also in the range, and if you're in the range and you've broken through that trend resistance, you can take the long trade going up that side as well. So whichever way you look at it, you're getting the same result, which is good confluence at the end of the day if you want to take a trade like that. What you could also do with this is maybe wait for it to come back and take some money in this area here, because I see there's a good few candles there. There's a bit of money lying here at the 149, 148, 750. And I think you did mention getting in at 149. Freya Shay, how's it? Well, good to have you. Good to have you. Okay. Yeah, you can wait until it breaks the range. You could wait. That's the. If you break a resistance or break a support, that's always a good trade. That's always excellent. But that's why we wait for it to break these trends as well. If you break the trend lines, you can get in earlier and you can get to trades earlier. It's like a sniper entry, let's say. That's why I use these trend lines. You've got your main resistance, you've got your main support, and then I dump the trend lines in between, because when it breaks them, it's almost like a sniper entry. I know that it's going in that direction because it's already broken that structure and we're moving in that direction. Sometimes don't even wait for the retest. So, yeah. So Eugene had a problem where his auto trade or his set profit taking line was not taken out on the C trader that he was trading on. This is the C trader program. And when contacting the broker, they said there wasn't enough liquidity, maybe, and the trade wasn't taken. If I'm right, Eugene, I think that was the situation. Now that I always annoys me, and it's happened to me before with cash brokers as well in the past, and I've seen it happen with other people as well in the past. Now, your natural human nature is to obviously think that they're doing something untoward in the background, and that's the first thing I think as well. I'm like, what are you guys doing? Because I had a price set there, and you should have taken it. You should have taken that price. Why didn't you take it? And I'm totally all with you on that. But here's an explanation that they sent to you. Their excuse was there wasn't enough liquidity when the trade hit. To me, that's kind of annoying and rubbish, because we're such small traders. There's much bigger guys. I can understand if you're an institution or a massive pro trader trading with millions and millions and millions of shares, because that's why they don't have stop losses, because if they were to hit their stop loss, it wouldn't take it, because there's just not enough liquidity to take it. So they have to do it manually. That's the only way. Now, I always advise the best way is, if something is getting close to profit or stop losses, to handle it manually if you can. But if you can't, it should take it out for you. It should handle it for you. Now, there's two ways that it won't work, maybe three. The one way is if the market's closed when the price hits. That we understand. If the market between that hour, there's an hour in between where it's closed, and it hits there and it doesn't take it because the market's actually closed when the price hits there. That can happen. That's happened to me with shares. That's happened to me with other products as well in the past. The other thing that could be happening here is when the price hits, it's spiked, and maybe it didn't hit fast or stay long enough for it to take the money off the table. Now, liquidity, that sounds like a bit of an excuse to me, because if you've only got one share, it should take it. But if there's 5,000 other traders in front of you that got there first, then it will give all the liquidity to them. And maybe if there was a big trade before yours, there wasn't enough liquidity left for your trade. What you've got to understand with a set take profit or a set stop loss is you've set an order price. So your order price is at 149.32, and it won't do anything below that. It'll only do anything above that price. So that could be an effect. Whereas if you close the price manually, you can close it at market order. You can close it, for example, at the market price. And at the market price, it'll give you whatever's available. So you might get some for less, some for more, whatever the case, and it will close everything right there. So it'll take everything that's available. But what you're asking it to do with a set take profit is give you only that price and above. And it also depends how you set the profit. If you set the profit only to give you that price, that could be a problem. It's got to give you a set that price and above, or that price and below, depending if you're long or short. And that can be a problem, because it's not just your shares, It's maybe the 5,000 other traders that got there before you that are taking all the liquidity off the table. Your price hits that exact price, doesn't go any higher than that to take any higher amounts or other amounts, and then it just drops off and you don't get your trade taken out. So while it sounds like an excuse from the broker's side, it is a possibility. So you can't argue that. Which is, yeah, it's annoying, you know, because when you take your own order, you sort of, I always take a market order. So fill the order no matter what the price within that region. And when you put your stop loss in and when you put your take profit in, clearly we always put it in with an exact price. And, you know, if you don't get that exact price and below or above, then the excuse is there wasn't enough market liquidity at that price. I get it. I understand it. I just feel that as retail traders, we're not big enough to be those guys. And yeah, it's one of those things. I think we have to live with it. It's something we have to live with. And if you want to get around it, you're going to have to trade out other trades manually. There's always going to be that one or two trades that's going to hit you like that. Either stop loss or take profit. There's going to be one or two. That's why sometimes with a stop loss, you'll have a price go through the stop loss and your stop will get taken out at even lower prices than what you set. That happens as well because there wasn't enough liquidity at stop loss, or there was a million traders before you at that stop loss as well, and then you end up paying more. That happens as well when you put auto prices or set prices in. That's where guaranteed stops come in. Guaranteed stops don't come in with, oh, no matter if the market's open or closed, we'll give you your stop. That doesn't work like that. Guys who offer you guaranteed stops are saying, we'll give you your price. We won't charge you more. That's what they're saying with guaranteed stops. So keep an eye out for that. Yeah, well, Daniel, we should have shorted the US 500, but it's nerve-wracking to short this thing. So I was actually, you can trade this and you can go short, but I was actually hoping to get a long trade out of it sometime. I prefer going long on the US 500. It's more comfortable. Yeah, but it is high. I mean, come on. It has gone quite a level. The correction does seem to be going now. There seems to be a bit of a correction in place. It seems to be going down that side. Were you long on the Nasdaq, Carl? You must have been. Yeah, obviously. Yeah, we're long. Okay. But yeah, it's fun to play. So Eugene, I don't know. I hope I answered your question a bit. You know, I've experienced it in the past, and I haven't only experienced it with one or two companies. I've experienced it with many brokers in the past, and it can be so annoying when that happens to you. Very annoying. You hit your take profit or your stop loss and it doesn't take it. And if it doesn't go through long enough, then there's nothing to take, and then you're the one that loses out at the end of the day, and the broker shrugs their shoulders and goes, sorry guys, you know. I think that was also funded trader markets. I do put links in the description to these guys for those guys who want funded accounts. But you know, if they start becoming any kind of problem or problematic to us, then we will move to someone else. But you know, for the time being, I haven't had too many issues. Are we going long on the Footsie? The danger, Shane, of going long on the Footsie is that the US 500 is going short. And you and I both know that these markets like to follow each other. They like to follow each other big time. Now, I like the thought, but let me show you something quickly here that I can see before I even do anything. What I'm looking at from the distance is this scenario here. I'm just going to draw that in. And that's a bit of a trend to the downside on the H4. And there's a good there's also a double top over here, a triple top. And it's getting very close to that good chance it's gonna come dropping down. Let's go to the daily. If you look at it on the daily, you've got the structure going up, which is really nice. Structure coming down, going up. Looks like it'll probably come down and hit this area down here. Let's just have a look at the weekly, and the weekly is not doing much better. So no, it's not calling me for a long at all. The head and shoulders did play out, however, on the H4. You see there was a shoulder, a head, a shoulder, and it played out the length of that head. It's the distance of that head to the bottom. Pretty much played out, so there's your bottom. But I think it's going to roll over and carry on going down. One thing I don't like to do is go long on the Footsie when the US 500 is looking weak, because I know they tend to follow each other. So it was your first trade with them, Eugene. That's like that's like the worst. That's like super annoying. Super annoying. Yeah, I know that would be like the worst. But yeah, that's the understanding that I've always had with that. I've had the same excuses on numerous occasions from other brokers on auto trades. Well, not auto trades, but setting your profit, setting your stop loss for an automatic trade out. And I always get that excuse, and I think I'm too small for you to tell me that. But I get it. I get it. There might be a pro in front of me taking all the liquidity, and then there's none left for me at that price. Okay. You know, I just wonder what would have happened if I'd said sell at market price. What price would you have given me? What would I have got? You know, would I have got that much less? Yeah. But yeah, Eugene, you're going to have to put up with that in trading. It's unfortunate, but the only way to control your trades 100%, like I say, is to trade them manually, and also, like I say, then accept that you might get less money if you trade out on a market order. Hi, Wendy. I'm glad you're joining in even late. I'll try and keep it at this time of the day so that everyone can get in. And then, of course, Thursdays, I'm going to keep it the same, which is a bit of later in the day. Because obviously, the US guys are going to struggle to get in at this time, no matter what. So just, yeah, let's keep an eye on that. But yeah, no, totally, Eugene. It's I'm all with you there. Every time that's happened to me, I was furious actually. Every time that happened to me with other brokers as well. You know, that hasn't happened to me with these guys. I must say, I haven't had one incident like that with funded trader markets yet. So I've been very fortunate in that scenario. But I have had it in the past with cash brokers, nogal, as well. And same excuse, no liquidity. I think they just use that as the standard excuse when it happens. Even if it's a technical glitch on their side, I'll bet you they'll just say that. I mean, I watched one once on a really reputable broker, top broker. And I watched my trade go, and it was a big trade, man. It was a big trade. And I watched it go through my take profit. And it just kept on going, and I thought, wait a minute, isn't it supposed to take that out? And then I literally clicked it manually because I was watching it, and it gave me pretty much what I wanted. So then I asked the question, wait a minute, it went through my profit level. What happened here, you know? So, yeah, it is very, very, very tricky. But yeah, Eugene, keep an eye on it. Just keep an eye. You know, do one or two more and just see what it does. Just make sure it's not just check if it's all working accordingly. And guys, as far as C-Trader goes, I don't know whether to blame the technical thing or if it's, you know, trading view or whatever the case. But as you guys know, this is the very first time in my 30 years of trading that I'm using a C-Trader. I've never used C-Trader in my life. For all of my trading career, I've traded with cash. I've never had a funded account until this year with you guys. So, well, you know, the one before and this one. So I've never done this funded thing. And the reason we're doing it on a funded account is because my mentality said to me, well, Rob, if we mess it up totally with the A team and the guys take trades that cause the account to lose, and it goes all pear-shaped, it's going to cost you $100 this way. And if you put $10,000 in an account and we mess it up, then you're going to lose $10,000, which is a little bit expensive. So, this is why we're doing it this way. Okay, so it's a funded account, it's a live account, but the loss is negated. And if we make a profit, I'll just withdraw it and that will pay for the account. So Bob's your uncle, eh? Excuse the noise. Yeah, so that's why I got into this this thing. So CTrader I've never used in my life before. My cash accounts mainly run on MetaTrader and also TradingView and one or two other strange accounts, but never a CTrader. Yeah, I can never remember the names of all these different accounts really, but not important. Not important. I mean, these platforms. Every single broker that I've ever used in my career have always given me the most amazing platform to trade with. I've never come across a platform that's been really bad or useless or whatever the case. They've always been interesting and nice. I mean, I like this CTrader. I think it's a really nice program. Simple, basic, easy to use, and particularly for someone like myself who doesn't really need a lot of indicators, let's say, to trade. It's fantastic. I love it. It's brilliant. Guys, if you've got any trades, let's have a look. What have we looked at earlier on? EuroCAD we were looking at to go long. EuroCAD. Okay. It really is going long, but it's kind of left us in the dust. Let's look out for that little... There's a top, there's a top, there's a top, there's a lot of tops here. It really does need to break through here, doesn't it? If it breaks through there, that'll be great. Let's see what that does. Okay, what else have we got? Oh, by the way, Wendy, the New Zealand dollar, US dollar got stopped out on a trailing stop this morning. But it's okay, we had it for such a long time. Yeah, and I'll look to get back in because you see what I've done here. Let's just close this down so we can get more space. You see what I've done here is I've put in the demand level with an area of liquidity. There's an area here with money. And if this gets down into here, we can go long again from the 57 level, hopefully, and take a long trade out of there. So that'll be great. That'll be quite nice. I'm expecting maybe it'll get all the way down to this trend support. And then we can take another nice long trade out of there because it is in structure. So that might be quite a nice trade, that New Zealand dollar, US dollar again. So we might just get back into that. I wonder. Boom, 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 boom. I wonder if we can set a price alert. There. Dum 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 dum. Show pop up and play sound. It'd be nice if you could send me the alert. Anyway, okay. Let's put an alert in there. Let us know if it gets down there. Okay. Danny, how's it? Short on the Aussie dollar CHF. Aussie dollar CHF. Surely I've got it here. Dum 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 dum. It's not in the favorite. Okay. Go. That's a nice short, eh? Nice short. When did you get into the short? But yeah, if you got into the top here, that's absolutely stunning. That's nice. Very nice. Where are we going with this right now? No, it's going to go long again, Wendy. The New Zealand dollar, US dollar, I just put the alert on it now. It's going to go long again. I'm waiting for another opportunity for it to come down, take that supply money and go back up again. It's just that I'd moved the stop loss up way up into profit. I forgot about it. So we made $83 on it. No big deal. Okay, so let's take this up to a day chart. Just want to have a look at what we have here. Yeah, it's a nice break to the downside, actually. Okay. Yeah, that's a really, really nice break to the downside. Yeah, look at that. On the daily, this one is broken to the downside. Yeah. Heavy break to the downside. 57,149. Yeah, okay. Yeah, oh, that's fantastic. That's good. You know, you could still get a short out of this. What I'd wait for now, because I'm at this point, I'd wait for it just to break below this low. And then it's probably good to go. So I would say probably let's put another alert in just in case it happens while we're here. And about there. Okay. Too many alerts here now. Let's just see if it goes through there. And that'll be a nice short, yeah. Because then it's breaking those lows. But it also needs to close here. How much? 11 minutes left. Yeah, if this guy closes, it's probably going to go through there. Probably going to be a nice little trade. I think if I go the opposite way so long, if I think short, I'll be a millionaire. Yeah, Carl, you know, I used to know someone who literally traded that way. If all the traders said, let's go short, he went long. If all the traders said, let's go long, he went short. And he was actually profitable. It's actually insane if you think about it. Okay, so that's Aussie dollars, CHF, right? Okay. Gold. So you want to go long on gold, but gold's, I'm going to take this out of here. Okay, I'm just going to clear that out of the way. Just so as we've got a nice picture of this. Because the money on gold is lying, in my opinion, over here. So, see there? Big demand of money lying right there. So my opinion on gold is wait for it to get to that level and then go up. It could break out of this level at the top here and shoot to the upside. But I'm just looking at, there's a nice supply of money lying right here. There's a trend line running right up here. I'm waiting for it to get into that, take that money, and then it's going to run like crazy all the way to 3,000. There's a lot of money to be taken here, I think. So I just think taking it there, there's no big deal if you put your stop loss down here, because it'll just come down here, take the money and go up. But I'm just being sort of cautious and waiting for it to get down to these levels. Grab it here somewhere and take it on the upside on a green candle. I think that'll be a nice long trade on the gold for now, taking us nicely up to the 3,000 level, which is a nice round figure, which I think we should get. We should get the round figure, most likely. Shall we have a look at the news while we're here? We haven't looked at the news today. We haven't got round to the news yet, so let's go and have a look at the news. Let me just get down here. It's always complicated to find these little things. Okay, let's go and have a look at the news and see what we've got. Hopefully my ugly mug's not in the way too much. US votes with Russia against European allies on Ukraine. This is why I don't want to be long on any trades over the weekend. Because stuff like that is stuff of nightmares, let me tell you. Trump teases economic development deal with Russia. So Trump is becoming buddies with Russia. Isn't that amazing? Okay, treasuries rally as traders boost bets on Fed interest rate cuts. Nvidia's H20 orders jump. as Chinese firms adopt deepseek's AI. Buffett bets sparks surge in Japan. It's amazing. And then there's an ugly trend developing in the stock market analyst. Everybody's calling for a bit of a nasty crash. Trump revives tariff threats on Canada and Mexico. So there's the tariff threats back 11 hours ago. S&P 500 NASDAQ futures slip as Trump turns to trade heat. So yeah, the news is looking a bit iffy, which is probably why the US 500 is messing around a bit. Bitcoin has slid as the crypto sell-off gathers steam. We looked at that. The Trump team is drawing up tougher chip curves on China. Yeah, it gets interesting. It gets more and more interesting as we go. So yeah, that should be quite interesting. Quite soon. Why is that showing me a nasty error there? No, I don't want to know about that. That must just go away. Right, let's just have a look here, guys. Homepage, your gateway to capital. This is the funded trader markets. Let's see how much they are today. Today, they, for a $25,000 account, are $89. Okay, when I was opening an account for us, it was $100. So it's gone down. It's quite cheap at the moment. The 50K is 149. So 149 for a 50K account is not bad. That's quite good. Quite decent. Not bad at all. So that's the Nitro, the one-step Nitro. Okay. That is just fine. The most popular one. Okay. Investment calculator. Position size. I wanted to talk to you about position size. If you don't have the position sizing like we do on our charts and you're struggling to work out your position, you can go to my FX book. It's free. I don't even sign in or sign up or anything. And you can just put your currency, if it's Forex, put your currency pair in, put your account currency, account size, risk ratio, which is 1% in our case always, your stop loss, pips, all that, and it can calculate it for you. It'll give you the sizing of your trade. So if you want to do that, grab this. It's actually quite handy. It's useful, when you're in the markets. Trade of the day today. For those of you who didn't see trade of the day, these are all the trades that we're looking at, up and down. If you want to come back to this, you can just come and have a look. And for those of you who missed the trade of the week video, I hope you didn't miss the trade of the week video. Here's all the trades of the week, the different trades we're looking at for the week and which way we thought they might go. This is just my idea of my feeling on which way the markets are going and that sort of thing. So if you're interested, pop down and have a look at that sort of stuff. That's the news for today. Now we go back and we go back to our wee charts and we go and carry on talking about the markets. Okay. Wendy says, I'm holding a few short positions for gold, thank goodness, on small lots. I'm getting tired of looking at it. I'm hoping to get a retest. It's made me highs. Okay. Let's just have a look. You're holding a few shorts on it. You've kind of gone against the trend there. Thank goodness there's small lots because you've gone against the trend here big time because the trend is seriously long. You've got to get over that supermarket mentality of thinking it's expensive. It's never expensive in the stock market means it's a great buy. It's something you got to go for. Totally different ball game. So yeah, don't be looking at it and saying, oh, look how high it is, let me go short. Not a good idea. Rather look at something, if it's expensive, look at where you can get in. So for example, somebody said here earlier, I'm looking for a long trade on gold, and that's the right thing. I'm looking for a long trade on gold because it's so bullish. It's in its trend. It hasn't broken its structure. It keeps on going up. So I'm looking for a long opportunity. And that's a good way to trade with a trend. And then there's your long opportunity. If it comes into there, you've got a nice opportunity to head on to the upside. Sorry, gold. It's made new highs. It should do a retest. Yeah, buy the dip, as Frederick says. Well, it says buy the deep. I know you mean buy the dip. Buy the dip. In other words, it'll come down, it'll dip, it'll go. It always does. The market doesn't go up in straight lines. So you're right, it'll come back and retest. So we hope. I've seen things go to the moon just for no reason at all. But yeah, you know, I see there is money here, there is liquidity. And if there's some big money out there, that's what you're looking for. That's what we're always looking for as traders. We're looking for the big money. So the guys with the big money, what are they doing? They're looking for liquidity. They're looking for places to get their trades. So they're going to be looking for that money so that they can buy in. That's what they're looking for. I'm not saying you should close it, but be cautious. Yeah, caution is advised because it is all long. It depends what your loss is and what your situation is on the trade. But yeah, you do have to be cautious with the trade. That's for sure. I see YouTube's telling me there's buffering, so hopefully my internet is working. It's very windy here in Cape Town today. And when that happens, for some other reason, I mean, I'm using fiber lines, but it still somehow affects the system sometimes. Once in the blue moon, not all the time. So if there's any issues, just let me know. But yeah, I don't know what goes on with that. But look, at the moment, we're also experiencing something called load shedding in Cape Town, South Africa, and South Africa in general, because they messed up with the power stations again. And one of the power stations tripped, and goodness me, I tell you what. So now we've got, I don't know if you know what load shedding is, but what it is because they've got a lack of power suddenly, then they switch us off for 2 hours and switch us back on, or 4 hours and switch us back on, depending what stage they're on or how bad it is. So over the weekend, it went to stage 6, which was 4-hour shifts, and now it's dropped back down to stage 2, which is 2-hour shifts, maybe twice a day, instead of 3 times a day, where they switch the power on and off through the country, which is why most people in South Africa have now gone solar and generators and all kinds of things, because if you don't have backup, you could be in darkness. It is rather insane, but yeah, that's how it goes. There was a time when South Africa supplied electricity all the way through Africa, and now we can't even supply electricity to ourselves, you know. But it is quite demoralizing to see some parts of our. We had all these beautiful little towns north of the Cape, you know, beautiful little towns all over the place. And the towns now, they all look terrible. They got potholes in the streets, and things are not working. They look run down. There are some things that are just beyond my understanding. Where's all the money gone? What's happening? You know, why is that? What's going on? Western Cape still well run. Our roads work. The traffic lights work, and you know, systems are in place, and we're still in a pretty reasonably good place. But most of the towns north of the Western Cape look rather bad. They don't look good at all, and they look a bit rough. It's actually quite demoralizing, quite distressing, I must say, because it was beautiful, and now it's looking a bit run down. It really needs some attention. I mean, all the train stations were closed. They're only now starting to try and get it back up and running, trying to get it fixed, trying to get everything back in normal again. So many train stations closed through all those towns, all those cities. Trains not running, railway lines not used. It's horrifying to see. Absolutely horrifying to see. Yeah, no, if you've had a few red weeks, Daniel, then it's time for them to go up. Time for you to have a few green weeks. But you know, you have that. You have a red week, you have a green week, it happens. You just have to work your way around it and get around it, as they say. Talking sup, Rob. Yeah, how's it, man? How's it? Good to have you here. So hopefully the internet is not driving us too crazy and too much buffering, because there's a big yellow thing on the thing here. That's there it goes. It goes away. That's better. Now it's working again. So I guess the connection is okay. Guess it's working. So yeah, that's gold. So yeah, you asked about gold, and gold, that's it. I stuck it out with Euro GBP, but now it's struggling. I did get in later though at 82,798 because I watched the vlog a bit later. So you stuck it out with Euro GBP. My gut feel told me to dump it. And Aussie dollar CHF. Oh, there's our Aussie dollar CHF. There it is. Okay. Looks like your short's working out nicely now. That looks like a really nice trade. Sure. Looks like it's going to go. Looks like it's going to go. Aussie dollar CHF. Is it going to break that level, or is it going to... It certainly does look like it's going to break that level. And it does look like it wants to go down from there. How far can it go? That looks quite decent. Looks like quite an interesting trade. Let's see if we can get a trade here. Can we get a trade here? First thing we've got to do is reduce the lots. And then let's just see. Okay, so the first thing we want to do is get the stop loss down to up to 57.2. 57.2. What did I do wrong here? Oh, I'm going to put it on sell, haven't I? Okay, 57.2. All right. That will give us a 254. And take profit. Take profit at 56. 56. Okay. Yeah, that looks decent. Let's sell it. What the hell? Dum 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 dum. So guess what, guys? We sold the Aussie dollar. One. So yes, all right, Shane. You set the take profit at 56,365. You notice I just set it at 56,000. You see why I set it at 56,000, and I love your idea. It's way up here and it's pretty safe. You could, there's a bottom there and a bottom there and a bottom there. I just look at that spike down there. I'll just put it right at the bottom. Keep an eye on it, and if it gets down to this level, I'll just follow it down with a trailing stop. Okay, and I put the stop loss above that level there, so it just keeps it safe. Why does it say trailing stop? I did not ask it to put a trailing stop in, did I? Don't worry about it. If it's a trailing stop, it's fine. It can trail. Whatever. It's far enough away. My take profit is 56474. 56474, which is there. Yeah, but yeah, I think you took the trade a lot earlier. But yeah, 1.2 for me is down here, but I don't have to take it down there. We're going to follow it down if it goes down, and hopefully it'll be a decent trade for the group, and hopefully it'll work out. Okay, Wendy, you in as well? So that's 3 of us in. So we're all getting into the Aussie dollar CHF short. Hopefully it works out, guys. Hopefully it goes well, and that becomes a decent trade. Now, the problem we had, like with Eugene earlier, don't rely on these stop losses and take profits to take your trades for you. Hopefully they will if you're not looking, and I haven't had a problem with that with these guys yet. It has taken out all my automatic trades, but if I can, I do like to keep an eye on it and watch out for it. When you enter a trade and get out at $98 loss because it went against your trade, And just to see, do exactly what you intended to do into early. Yeah, you know, Daniel, that is one of the big issues. One of the most demoralizing things is when you get into a trade, like for example, I did the Euro Great British Pound, right? And in this case, it's doing the right thing. It's it's making me feel better because I got out at the right time and it's going the right way. Or the New Zealand dollar, US dollar, for example, is also doing the right thing. It took out the trailing stop and it's gone all the way down into this level, and it's making me feel a hell of a lot better because it's doing the right thing. In other words, it's justifying what happened here. I made the profit and it carried on losing. So great news. That's perfect. But had it bounced and gone the other way, that's kind of the most demoralizing, annoying thing. You know, you feel like the markets are against you, the world is against you, because it takes your money and then it goes and makes money, and you think, how can that even happen? You know, that is. I know how that feels. It's a horrible feeling. I know the feeling, and it happens a lot. Yeah, this one's looking nice. I'm doing bad measure. Unfortunately, got to get better. The thing with getting better at trading, it takes time. It does take a lot of time. It takes a lot of psychological patience. It takes a lot of, you know, the most difficult thing for a trader to sit and do is you've got this open quite a lot of the time. I close it sometimes so that you guys can see the bigger chart. Otherwise, it'll be open, right? So you can see your trades, you can see what's happening there. And one of the most difficult things to do is to sit and look at red. For long periods of time, your trade goes into the red and it sits in the red. And you sit and you look at it and you think, oh man, come on. The psychology behind that is really difficult, to sit and look at your trade being in a loss. You know, the patience of it. So what you have to get your mind around is you took a trade with a view to, my trade was taken based on, I want to make a profit there and I'm going to take a loss there. Now you've got to get your mind around the fact that that's what you're living with. You've made that decision. Now walk away from it. If you can't walk away from it, if you have to sit here and watch this 24/7, you've traded too much money. You've traded too big. If the loss is too much for you to handle, you've traded too much money. You've traded too big on that account or in general. So if you can walk away from it and it's not really a big deal and you're not too concerned about it, then that's fine. Sometimes the best way to learn is to do this, is to close this off so you can't see it and to go and look at another trade and forget about it. It's in the background now. Now you're not looking at it. Now it's not worrying you. Okay? Now it's not bothering you. Go look at it later. You know, often I'll go to the shops, I'll go and do my thing, I'll go to the beach, I'll go and do whatever I normally do, come back later in the day and see what happens. And then I'll end up with something like what happened to Eugene, where it goes to take profit and it doesn't take my profit, and you come back and you're in a loss, and then you're all angry, and then you want to punch the screens or something. I don't know. Oh, goodness me. Okay, so here's a big question from Anonymous PE. Mr. Anonymous, what's your name? Come on, tell us your name. We all want to know your name. Anyway, how much would one put in to go long, 2 weeks or a month or two on gold? Here's the thing. If you want to invest in things, then invest in shares on a one-to-one basis and forget about them, set and forget. This, on geared products, on 500 to 1, 100 to 1, that sort of thing, you're not looking at 3 months time frames. This is trading. Trading will close your account down very quickly. So, you know, if you're looking at longer time frames, you shouldn't be looking at geared trading. You should be looking at one-to-one trading. You should be looking at investing in the market over a long period of time. On trading, we look at this in an extremely short-term way. We're trading on a 4-hour chart. You can trade on a daily chart. You can trade on a weekly chart. That's all good. Holding things like gold over a weekend, you can do. You can take that chance. But things can change rather quickly. A good example of that is Bitcoin. Do you see these long red lines at 100 to 1? Those can hurt you very quickly. Be very careful looking long term with geared trading. It can be very detrimental. But if you're looking at long term, gold is not your thing. Gold is a cyclical product that goes up and down. So in December, looks like December the 23rd, just before Christmas, gold started going up, and it went up on this long trajectory. So now you're thinking, ooh, gold's just going to keep on going up forever. But put this in perspective. Put this in perspective. How long has gold been going up? Gold's been going up for a month and a half, 2 months. At that sort of trajectory. Would you call that major bullish? It is. It's major bullish in a short-term trade. On the long term, it could correct. Now, the big thing around gold is people always talk about gold as the safe haven trade. In other words, when the markets are crashing, people will buy gold. But I've seen in many cases over my time that when the S&P is crashing, gold sometimes crashes as well before it goes long. So no, I won't look at gold as a long-term trade. I won't look at gold as a forever trade. I look at it as a trade for now with a target, and that's it. If I wanted to take a long-term trade, then I look at shares. I look at when the 50-day moving average is above the 200-day moving average. I say that's a great trade for the next 30 years. But long-term on gold, no, there's no long-term on gold. Gold you can look at for the next week, the next 2 weeks, and then you're kind of like where you are. We're looking at gold for a long, we're looking at it coming in, taking this money here, and then moving up. Could take a day, could take 2 days, could take 3 days. All we look at is we take the money, we get out. That's it, end of story. There's no way you can look at gold as an investment for a long period of time. And if you did want to, you'd have to do that on one-to-one money with a view of set and forget, buy it and forget about it. And you can't do that with gold because gold goes up and it goes down. It's a commodity. So if you want to look for investments for a longer period, then look at the indexes. I would rather put my money, for example, in the US 500. I would say wait for a correction on the US 500, which you've actually got now. This is actually quite a good buy on a one-to-one, or maybe down here at the 57. Buy as much as you can. It'll probably go to 6,600 by the end of the year. If you're looking at more long-term investments and more long-term trades, you'll make much more money on the index than you will on the gold. Just saying. But don't do long-term investments with geared trading. It's going to cost you money. Firstly, you get charged every single day. And secondly, when it goes pear-shaped, it goes insanely pear-shaped. Like over a weekend, a war breaks out, something happens. I mean, already Trump's siding with Russia and Ukraine and going against Ukraine, all this stuff going on can cause a lot of iffiness in the market over a weekend. Let's be very careful. Okay. Boom, 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 boom. So yeah, as I said, don't go long term on gold. Gold is not your long-term trade. Gold is a short-term trade. You can look on the weekly, for example, like I said. But if I look at gold on the weekly, it's going to show me a long trade. And look at that. That's your weekly chart on gold. So what you're saying to me is if you take gold, you know, where's it going to go, right? So it's going to go to, I believe it's probably going to get to 3,000 here. But look at how far down it's got to go to fetch the money. you know, all the way down here at 2,600. If this thing decides to turn around, fetch the money on the weekly, you've got a long way down. I hope you can cover that with your money. So that's where your problem comes in. So no, if you get trading, that's why we trade on the H4. We trade short term. We look for the money to take here, and then we go. Okay. All right. Justin, I said geared. Geared as in 1 to 100, 1 to 500. In other words, geared trading, funded trading. In other words, you've got, I'm not talking about funded trader markets now. I'm not talking about that sort of thing. I'm talking about if you've got a cash account and if you put $10,000 down, you can trade $100,000 sort of. That's geared trading. That's where they give you funding to trade a larger amount than the money you've got in your pocket. Okay. And on these funded trader markets, when you take these challenges or these accounts or whatever, then they give you 1 to 100, some 1 to 500, whatever. And then you're trading on the same basis as if you had a geared trading account where they give you 100 to 1, 500 to 1, 10 to 1, whatever you negotiate. Okay. Yes, I most certainly can teach you more in investment using moving average. I tell you what, NT, do me a favor. Go to my YouTube account and go and look for the video on investments where I literally show you how to do investment. But it's really simple. When I invest in the stock market, I choose the best shares based on what I see in the world. In other words, if it's in South Africa, I look around and I see a shop doing well, a business growing. I look at it and I think that's a good investment. If it's on the other side of the world, like in America, like maybe Amazon or Coca-Cola or whatever, I look at the company and I see what it's doing and I see it's improving and I think that's a great company to invest in. Now you must understand, when I invest 1 to 1, I invest for the next 20, 30 years. Well, not 30 years anymore. It was 30 years. I've reduced that now to probably 10 or 20 years, but okay, that's fine. I'm old. But what I do is I look at it and my entry on a chart, I don't look at these things from a technical perspective, but if I decide I want to add to Amazon, I want to add to AB InBev or something to that effect, I look at the chart and I say, oh, the price has come down a bit, maybe whatever. And then I take a 200-day moving average, I put it up. I put a 50-day moving average up. If the 50-day moves through the 200-day moving average, that's the golden cross, that's a buy. And if it's below the 200-day moving average, that's the death cross, and it's normally a sell. I don't buy and sell my shares. I keep them forever, but it just gives me an indication of where the market is at any one given time. Go and look for my investment video. It is there. It's 20 minutes. It'll give you a good explanation of how you can invest in the markets and the best way to do it. I might even make another one in the near future, giving a bit more education on that, because it's good for the guys to know. Cheers, Daniel. Thanks for being here. Interesting developments about gold here in the US. Some people are wondering if the gold is still in the bank. Should be interesting. But you guys do know that the US dollar was detethered from gold. Now, in the old days, your currency was tethered to the gold. In other words, the amount of gold you had determined the value of your currency and the assets in the country and all the rest of it, and it was tethered to that. So if you didn't have gold, you didn't have much currency value. Now they detethered that and they took it away, I think sometime in the 50s or maybe later on, or 70s, I'm not sure. They detethered gold from currency. So your currency is floating. So in other words, the promissory note of a US dollar is effectively the value that people are basing everything on. I understand that it's the asset value of the country, the money flows in the country, and what the country's worth, but it's detethered from the gold reserves completely. So it's no longer worked out against, US dollars actually no longer actually worked out against gold. So effectively, the floating US dollar is the value. So the US dollar is basically a promissory note, and that's it. End of story. That makes for a big problem. So whether the gold is still in Fort Knox or not doesn't really matter to the US dollar. But if they find out it's not there, that's going to be That's going to be hell to pay. I can tell you that now. Leveraged, then use 1 to 500. 1 to 500 is quite serious leverage. Oh yeah, geared trading is a word that we've used for many years in the past. Yeah, leveraged is just another word for it. That's pretty much it. Yeah. I just don't use the word leverage. It's a longer word. But yeah, leverage trading. Okay, yeah, trading. It's just terminology. And like I always say to you guys, do me a favor. When you go on the courses and when you go and learn how to trade and when you go and learn all about the markets, don't play big into learning about the terminology of trading. It makes you look good, but it is not going to make you money. Learn how to make money. That is one of the big things I always play into. Guys come back from their courses, man, they're talking gibberish, man. It's like when a guy goes and becomes a pilot and he comes back and starts talking abbreviations to me, and I say to him, "Bud, I'm not a pilot. Don't talk to me that way. I don't understand a word you're saying, man." Oh, right, okay, just learn how to trade and forget about all the gibberish. Don't worry about it. It's not important. They'll because it baffles your brains. They put all that into your mind and they make you think that you've learned all the stuff about the stock market. And then you go back and you try to apply something and it's like, I'm so confused. That is a big problem. Try to get that out of your head. It's great to know it, but it doesn't matter. Okay. Sorry guys, not me. If to hit send gold reserve is in question, whether or not there is actual gold in some place in Kentucky. Good grief. Exactly what I meant, Wendy. I believe Fort Knox, something like that. Yeah. Okay. Can you teach me an effective money management system, Rob? Also, that question, can you teach me an effective money management system? Go, like I said to NT as well, go and watch that investment video. And then you're welcome to ask me questions in the comment about it. And I will teach you everything you want to know. Okay, that's no problem. Just understand that it's what I do. I'm not giving you financial advice in any way whatsoever. It's just what I would do. And that's how we work. Okay. It's, have a system, have a strategy, keep it constant. Always have a plan. Plan's important. But yeah, my answer is the same to the Tarkov newbie. Can you teach me effective money management system? Money management system? Yes. Just go and watch that video as well. Manage the money. That's it. Okay. Okay. I see that might be, as I always say to you guys, the win rate is meaningless. Doesn't matter how much you win. It matters what kind of profit you can take home at the end of the day. It's amazing how still to this day, nobody gets that the market's subjective and that trading is 50-50. Nobody gets that there has to be a willing buyer and a willing seller in the market. It's a market. It's a market. It's what it is. It's a market. People buy and people sell. There's human beings behind these squiggly lines. And the sooner the aha moment comes and you understand that, then suddenly you realize, oh, this is what I'm dealing with here. I'm negotiating. I'm negotiating the best deal for my trade. That's what I'm doing. So yeah. Then one of the big things I like to talk about sometimes as well is remove the FOMO, fear of missing out, because I also hate abbreviations. Fear of missing out. Remove the FOMO. Remove the fear, the actual fear, and take your trades, follow your profits, get around it. It's one of the most difficult things you're going to have to do in the markets. Aussie dollar, US dollar short. Aussie dollar, US dollar short. I was looking at long earlier. I see things are taking a turn for the difficult. But here's a case in point. Let's do a Fibonacci on Aussie dollar, US dollar, just quickly. And you could probably get a trade all the way down to this level here, a short trade, if you were looking at that. Okay, if that was the top, just looking at that, if you wanted to buy, you could get down here as well. But in reality, our type of trading, that has broken to the short side. Definitely. How does it look on the day? On the day, tell you what, let's be more generous and draw it in on the day. And just to be, yeah, on the day it's too generous. But let's keep it on the 4 hour. On the 4 hour there. Just trying to see, guys, what we got here. And there's only one way to draw this in, and that's through there. Which means it's broken to the downside. And it does look shorter. Okay, just watch out for these bottom levels here. Let it break through there. That one we can take out. Does look short. Does look short. Does look like it wants to break to the short side. Okay. That's gone quite far already, but like the trade that we took over here. But yeah, if you're looking to short it, I wouldn't go against it. No. Yeah, very similar to the Aussie dollar CHF, which means the Aussie dollar is obviously playing a big part in this, more than the US dollar. And we'll be taking two very, very similar trades, I suppose. So, but yeah, if you want to do it, then you can go for it. Okay. I hope you're very young when you say you wish I was your grandfather. I hope you're a really young guy and not my age. But thanks for the compliment anyway. I just hope you're a really young guy. Okay. Okay, so I won't take both trades here because I think they're both basing it on the Aussie dollar rather than anything else. So I'm going to stay with the trade that we've got. But yeah, if you want to go there, that does look like a reasonable short for now. That means my New Zealand dollar, US dollar, which we stopped out on, is doing the same thing. But now what we have to, I wonder if the Aussie dollar is doing this as well. You see there's money here on the New Zealand dollar. Let's just see if there's any money there on the Aussie dollar. Not really. It's down here on, yeah, look at that. Watch out for those guys. You see, when you look at other things, this is what happens. You start to see other pictures. Look at that picture. Aha. Okay, if you're taking the short trade here, just watch out for this. And I do hope it's not there on our trade because we would have missed it. Yeah, it's on this, it's further down. So I think on this we're okay. And this is all the way down here. I'm just looking at demand levels where there might be some money which could turn the trade around. Look, it's quite far away on this one. So all the way down here, and I expect this one might even get all the way down to here. But yeah, you've got to keep your eyes open for that. And New Zealand dollar, US dollar, it's actually quite close. I would like to see what it does here because there's a lot of confluence here where it could bounce out of here. Maybe our trade will move a bit quicker, move a bit faster to go down. Okay. Let's just see how that goes. All right. That's interesting. Okay. 31 is... I could be your dad, maybe. Yeah, that's cool. All right. Yep. But yeah, I'd say rather than take the Aussie dollar, US dollar, maybe take this one, Aussie dollar CHF, because you've got more room, more risk to reward. The risk to reward is better. I think it's going to be a better trade in the long run over the period. You might get a better run down to here. Yeah, so let me know what you guys thoughts were on trade of the week, by the way. Is it something you guys are interested in? I saw one of you two guys did like it. So adopted, yeah. So I hope it helps. I'm gonna try and do that on the weekends now as well. Trade of the week. It does affect one or two of the other one of the other videos or whatever, but I mean it wasn't really that important to have the Friday video. So I'm thinking you'll have the Monday educational, the Wednesday, and then a weekend video which gives a rundown on the week for the markets, which is fair. I think that's going to be the best. And then the live shows Tuesday and Thursday. Like I said, I'll add to the live shows when we get more concurrent viewers. We'll get like 100 concurrent viewers. Then I'll start adding to the live shows. But for now, we're a very small crowd, so it seems to be staying small for now. Trade of the week. Let's just go to trade of the day. And trade of the week was actually, was actually a buy on the Aussie dollar, US dollar. Look at this. Let's just have a look. Trade of the week was actually a buy on the Aussie dollar, US dollar. Now, that said, that didn't mean buy immediately. There it was. Trade of the week was a buy on the Aussie dollar, US dollar. Okay. Which would have gone up from here. It looks like that might be failing. Trade of the week might be failing. But okay, that's what it was. It was a buy. But now on the short term, looking more like a sell, but it is coming into this area, and that buy might come into fruition because it's only Tuesday. So, yeah, the weekly trade, you've got to understand that the weekly trade is different to the daily trade, eh? There is a disparity there. The weekly trade might only play out later and at a different pace. Like if you're trading 5 minutes, it's going to play out at a slightly different pace. Okay, Shane, you've gone short. Yeah, well, it was showing as a buy for the week, but it's showing as a sell for the day. So there's, you might, it's still gone short. It's still going short on the day, but on the week, it might give a different perspective on the longer term. So this might still go long from here, out of this area, over the period of the week. The longer you go with the time frames, the more things, more clear things become. There's nothing wrong, for example, being short here, knowing that you might have to get out here and go long, with a weekly perspective being a buy. Okay. Aussie dollar, US dollar, for example. Okay. If the Aussie dollar, US dollar bounces out of this demand area, then we're going to have a take profit all the way up here at 64.2. If it breaks through, you've got to take profit all the way down here at 62.6. It depends on the run. My take profit would be down here at the bottom at the 62.6 if it breaks to the downside. The weekly chart was showing against that. It was showing along. So it could bounce and go out of here. But that said, if it breaks through here, you've got a really nice trade coming all the way down to the 62.6 down here for the take profit on the sell. On the long trade, you're looking more like a take profit way up on the high side, around about the 64,000. So, yeah, 64,200. If you go to the weekly, you say, oh, I want to take a long here. If you took a long on a weekly trade with a long-term view on it, so in other words, you get a bit of retraction here, it comes down, and then it goes up. You're looking at a target of 70,000. You're looking at a massive target on the weekly. Just remember, your targets are also different, and your candles are also going to come down and go up. Your stop loss would be that much further out as well on a weekly. On a weekly, you'd be looking at a stop loss of 61,000 and a take profit of 70,000. And then sit back and wait till the end of the year sort of thing. It's like going to take forever. But the weekly chart sort of just gives you a perspective of where things are going. But what I did see on the weekly is this little level here at 65,000, where there's a supply of money, which could hit and then come down as well, which tends to be sort of pretty close. At the moment, it hit the 64.2 and it's come down. But I'm looking to see if it takes the money here and goes up, or if it takes the money further down and goes up. So it's short for now. It's actually short for now. I'd be a bit wary of taking the short right now because of where it is. It's right in this level. So one does have to be cautious with that. Shane, if the chart is different, it's generally a broker issue. It's generally different brokers, different times, different, yeah. You do get that. I've seen that on numerous occasions. Also different instruments and what have you. But they'll be very close and the pattern will be the same no matter what. But the chart might be, for example, on a different hour or something. You watch out for that. I got the question here, in your trading career, were there moments almost no losses or the opposite as well? Absolutely. And as I always say to you, trading is a 50-50 game. You're going to win half your trades. You're going to lose half your trades. I've gone through periods of 4 months without a win. You know how that demoralizing that is, where you just want to walk away and you just got to keep on going. But then I've gone through periods of 8-9 months where you just win all the time. You just keep on winning. Those are great as well. So yeah, you do get that. Absolutely, you do get that. But the general in the market is you get ups and downs all through each and every month. So you get wins, loss, wins, loss, wins, loss. That's the general. But when you get those runs, you got to be very careful, especially the positive run, especially the winning run. If you get a winning run, you got to be so careful of not becoming overconfident. The word cocky comes to mind. You start getting so overconfident that you can just throw money at the markets. You just can't do anything wrong. And then that one big one will come and it'll take all your confidence away. Always watch out for that. On the flip side, when you're losing a lot and you're not getting out of that doldrum, normally if I take 3 losses in a day, I will walk away. But when you have those losses every day and it just keeps coming, you just can't get out of it. You got to be careful of your mind not going into some kind of depression of I just can't get this right anymore. What's going wrong? So that the market will do that to you. It definitely will. Yeah, that's a good question. Yeah, Danny, the scalping, people get into the scalping because of, sometimes, look, trading is boring. But then, some people have said to me, I do the 5-minute charts, it's exciting, and I do it, and I'm going, and I can make money out of the 5-minute charts, and so on and so on. Trading can be boring if you do it right. So if you go on the slower time frames, the 4-hour, the daily, the weekly, whichever you prefer, the hour, the slower you go, the more chance you got of making profit, the more reliable your information. And the one thing I can tell you in life is making money is not exciting. Making money is boring. The actual process of making money can be exciting. Things you do, the things you get involved in, the things that keep you busy can be exciting. But the actual making of money is boring and tedious because it's repetitive. And if you can't keep consistency, and if you can't let it run slowly, you will run into an oncoming train. So you have to understand that whatever you do in life, whichever way you do it, the making of the money itself is generally, in 90% of the cases, pretty boring. If it's not boring, you're probably running to a head-on train. Just keep that in mind. So the 5-minute charts, and this is where I get to it, the 99% of traders losing on the 5-minute charts, they're running for an oncoming train, always, and it looks great, it looks marvelous, and you see these guys showing you all their wins, and they themselves might even think they're doing quite well, and that oncoming train is coming. It's just waiting for them to come around the corner. And if you don't know what you're doing with that stuff, you are gonna get hurt. So yeah, I'm glad that you've moved on to the higher time frames, moved away from those 5-minute charts, because even pros that have been in the market as long as I have, or guys that really know what they're doing, they get in there and they trade the 5-minute charts and they just can't do it. You just can't do it. You just keep on losing, and you just don't understand why. At best, you break even. I tried it for a while and I was break even, and I thought, oh, okay. But I also realized you're wasting your time. You're working all those hours in there. You win 8 trades, you think you're the bee's knees, and the 9th trade takes all those wins away, and you think, oh, goodness me, it's demoralizing, man. It's absolutely crazy. And that's why I say it's not about the squiggly lines. It's about the strategy. And if you have the strategy right, then you'll be okay in the long run. The big thing is the system doesn't matter. You can play around with the system. That doesn't really need to be that consistent. But your strategy has to be consistent. The amount of loss you take, the amount of wins you take has to be consistent. That has to stay. Because if you change that around, then the strategy is just not going to work for you. It's just going to be all over the place. So you've got to keep that consistent. Trading minis is a good thing because then you can trade with lesser amounts. And I've always been a firm believer in trading partial trades. Trading minis, being able to trade lesser amounts. Why must I trade a whole basket of trades when I can trade a small amount? If I don't want to trade a big amount, why should I? And I can take my $1,000 stop loss or my $250 stop loss, and I can put it in there, and I can take a better trade because I can trade minis. It's yeah. Thanks, Wendy. I appreciate that. I'm glad that you guys are enjoying the community. It's important. And I'm glad you guys are here, because if you guys weren't here, I wouldn't be here. What would be the point? I'd be talking to myself. I always wondered, when I put the videos out in the first place, would anybody ever watch these videos and be interested in knowing that you can't make $1 million in a day, and that trading is hard, and you could lose, and all the stories and all the things that I show you guys, and how to trade price action, and why we trade this way, why we keep it simple, and all that. And I thought, will anybody ever really be interested in hearing this? Because all the videos that I saw out there were very much the opposite, very much promoting making money in a day and a course and all the rest of it and all that sort of stuff. And then I found that people were interested, so I thought, okay, I'll get on with it. But then I also thought, should I even consider a live show? Because, I mean, it's not like we get millions of viewers. And thought, why not? And here we are with our live show. And at least some of you are getting something out of it, which is important. And we've got a little community together, which is great. And that's what I enjoy. I enjoy that little team that we're building, that little community that we're building. You guys can help each other. It's not doesn't just have to come from my side. So what I think as well is, please feel free to ask your questions. Put them in the comments and I'll get to them. Like I say, like with Eugene as well earlier, I can't always give you a proper answer in the comments. I've got to go and give you a proper answer maybe in the live show, or we'll do a video. I'll put it in the video, maybe the weekly video or something, where I give the answers to all the comments for the week or something like that, for the serious questions, and we can go through it, or whatever the case. Because to answer some of the questions in a comment is just, I can't get my point across. I need to speak to you guys to get my point across. Yeah, so Shane, my take profit for Aussie dollar, US dollar is 63.094. 63.094 on the short. Okay, that's pretty good. So you're expecting it to get through this demand level, then you might as well put it at 62.6 as well. But it's a good take profit. That's great. Shane, what you can do is what I always teach in the strategy, is take your stop loss and follow it down. When it gets to your take profit, so you've decided you're not wrong, that there's no wrong answer to what your take profit is. Remember that. There's no wrong answer. That's where you want profit. You want profit at 63.094. You're happy with the profit at that level. So what I would do is I'd say, that's where I want my profit. So whatever happens at that level, I'm happy. Then I would take my stop loss, put it right up behind it, and then put it on a trailing stop so that it follows it down. And then let the trailing stop follow it down. When it comes back and takes it up, you've made your profit. And if it goes all the way down here and does that, wow, well, you'll be so happy with it. It'll be insane. So rather than just crossing it out and saying, I'm out of there, bring your take profit right up behind it, your stop loss right up behind it, right up close, and put a trailing on it and let it trail it down. And then let take it out that way as well. That's also a good way to make more profit. That'll help you. Hey, Kevin. Yes, IT issues. Goodness me, IT drives me insane. I tell you what, when will Windows ever get it right? I mean, Apple is not that bad. The Apple, that kind of switches on and off quite well, and it updates at regular times, and that's all good. And I've got my Apple account. Even my cloud account is with Apple. Everything is with Apple. But my PCs and that, I tend to use Windows. And when will they ever get it right? I tell you, their updates are insane sometimes, and at insane times. And it can take years for the PC to start up. Now, the only way to get the PC to start up fast is to buy the solid-state hard drive that you plug in. Looks like a little PC board. You know, it's absolutely crazy. It drives me insane. But technology. So yeah, Shane, you see I use both, and I can see the difference. And Windows drives me crazy sometimes. Drives me completely crazy. So here's the question again, and then they're all good questions. How many trades you take in a row? And so to repeat, I don't count how many trades I take. I don't count when, how, why, what, because that's limiting. You shouldn't have limiting beliefs. You shouldn't have limiting things in your day, in your trading and that sort of stuff. If you're going to take trades, take them when they're ready. Don't say, I've got to take so many trades, because then what happens is you're limiting yourself to that. You're like, I have to take that many trades in a row. Otherwise, I haven't done my job for the week, because that's what you're going to feel like. You're going to feel like you've done your job wrong because you didn't take 10 trades. If you can take one trade and make all the money, that is gargantuanly the best thing you could have done in your life. Okay. If it takes you 10 trades, it was actually you made more work of it. Right? So, you know, to say that you must win every trade as well. How many trades can you win in a row? No, trading's 50-50, and it always will be. It's subjective. To tell me that you are good enough to win every single trade in a row with a proper target, You're lying to me. There's no chance you can do that. No chance on earth that you can do that. You can win 10 trades in a row if you just, like, every time it goes into a profit, you click sell. That's like scalping. Every time it goes into a profit, you click sell. But there's one trade that's going to come along that's going to go red, but it's going to go red big time and it's never going to go green. And that's the one that's going to take out all the profits from all those little ones that you said you could win every trade. But to win 10 trades in a row on a profit target, on a proper profit target, a proper decent profit target, you ain't going to do it. No one's going to do it. It's a 50-50 game. No chance. I've never seen anyone do it. Never. Okay. It doesn't work. You can take profits. 5 pips, 2 pips, 10 pips. Yeah, everyone can do that. Your problem comes in that you've got to have a stop loss of 2 pips to cover that 10 pips, or 5 pips to cover that 10 pips, right? And that'll happen very quickly. I hope they're showing you those losses, because if you've got a proper strategy, so you're scalping and you say, I'm going to win 10 pips on every trade, right? I'm just using that as an example. So my stop loss has got to be 5 pips away for me to make this work. You can't tell me you're going to win 10 trades in a row, 20 trades in a row. There's no chance of it. There's going to be loads. 50% of those trades are going to go out to the 5 pips and take you out, if not more. Okay? But if you don't have a stop loss, then yeah, you can win a lot of trades. But you don't have a stop loss, then that one trade's going to come along and it's going to take 100 pips, and then all of those 10 pip ones that you were going to win will get wiped out. So yeah, it's no, nobody's that good. Nobody is that good, and nobody's got a system that's infallible. That is just rubbish. Doesn't work like that. Okay, so yeah, IT issues and people using abbreviations drive me nuts too. Yeah, Kevin, much like me, just boggles the mind. Yeah. Yeah. That's why I'm here. I'll tell it the way it is. Thanks, Eugene. Yeah. I just say it the way it is, and that's what it's all about. At the end of the day, yeah, that's what it's all about. Guys, I am going to have to be on my way. Just remember, remove the greed, remove the FOMO, fear of missing out, so that Kevin and I don't go insane. The actual fear, and get your psychology around the trading, and it'll all come together. Follow the strategy. Don't believe that you can win every trade, because anyone who tells you that there's just something not right there. I don't know. I've heard so many people say it, and yeah, I still, in my 30 years, I'm still yet to meet the person that can win every trade in reality. Sit them next to me in real life and show me that they can win every single trade that they take. And I want to know what their system is. I want to know what their strategy is. I really want to know this person, because that's insane. Okay. It doesn't happen. It's not going to happen. It never will. So you have to get your mind around the fact that you're going to lose some trades, probably half of them, maybe more. And once you get your mind around that, then you start to figure out that, well, maybe we're not all perfect. Maybe we just need to work a strategy here so that we can make some more money on our wins. Okay, so the new time, Wendy, is 11 o'clock GMT plus 2. I'm doing 11 o'clock GMT plus 2 on Tuesday. I think we're going to stay with this time for now. We'll stay with this time for a couple of weeks, see if it all works out well. And if it's working out well for all you guys, then we'll stay at this time. And then on Thursdays, we'll definitely keep it at 2:30 GMT plus 2. That seems to work quite well. And we'll just work around that for now. I think that's perfect. What do you think, guys? And all the best on your trades, guys. And I want to thank you guys for being here. I want to thank you guys for being part of the team, for joining. If you guys can help each other with answers, please do. It's fantastic to have a community where everyone helps everyone, and there's no wrong question, there's no wrong answer. You know, there's always an opinion. This is trading. Not everybody's right. Not everybody's wrong. Okay. And Wisconsin, thanks, Dave. Good to see you. But an absolute pleasure. If you guys are late on the show, have missed the show, please rewatch from the beginning, and all the information will be there. Guys, until the next time, let me bid you farewell and send myself on my way. And I'll chat to you soon. Don't forget to come back and watch the other videos. We'll be back on Thursday at 2:30 GMT plus